Good morning. Welcome to the Genghis Weekly Investor Briefing. My name is Damaris Mukulu, the Head of Brand Marketing and Communications at Genghis Capital. And it's great to be here with you on the last Monday of November. That also marks the final edition of our briefings for 2021. Very exciting. It's always wonderful to see returning veterans to our webinars. It gives me a thrill and the whole team too to know that these Monday sessions are offering you value. And it's also humbling to see new names on the attendee list. That you decided to register and join us today and for every single Monday in 2021 has been indeed a pleasure and an honor. The Genghis Investor Briefing format is, as always, we'll have a macroeconomic overview and a commentary on the fixed income and equities markets, complete with trading recommendations from our research team. Presenting today will be Melody Ndanu and Wesley Manamba, who have become familiar friendly faces. Ours is not a one-sided affair. We've always welcomed all attendees to use the Q&A function to send in any questions you may have to our team, and to also use the chat box for any comments or ideas you may have. So please take full advantage of this session to get your answers, to your financial market questions, and any other commentary and ideas that you may have for us in 2022. I can't believe we're already talking about plans for 2022. Anyway, that's enough from me. I've been looking forward to this session, just bittersweet. So I'm sure you have as well. So Melody, the floor is yours. Let me enable sharing by all panelists. There you go. You're good to go.
Thank you, Damaris. Good morning, everyone. Thank you for taking your time to join us today. Just give me one moment to share my screen. Is it showing now?
Yes, it is.
Okay. So we'll start by looking by the money supply statistics that were provided by the CBK. So the latest figures shows that the M3 money supply grew by 8.7% year on year to 4.2 trillion. So this growth, even though it's decent, it implies that the September target, which was 11.4% year-on-year growth, was a big hurdle by the CBK. So M3 is actually extended broad money, which is M2 plus residential currency deposits. Now that's the foreign currency deposits by customers. So the money supply was bolstered by a 16.1% year-on-year growth in foreign currency deposits to 769.5 billion, though this is still lower than the March 2021 peak, which was about 779.7 billion shillings. So we are the opinion that investors converted their money into hard currencies like the dollar so that it can hedge against the depreciation of the shilling, which you've seen it's been under pressure for some time now, since around June. So M2, which is a broad money supply, which is M1 plus this quasi long-term deposits, so mainly these term and savings deposits in banks, it grew by 7.2% year on year to 3.4 trillion. It was uplifted by an 8% increase to 1.6 trillion of quasi money in banks and non-banking financial institutions. So that's like SACCOs. So M1 is actually coins in circulations and as well as demand deposits held by non-government and non-demand deposits. So this supply grew by 6.3% year on year to 1.8 trillion, mainly due to a 4.3% jump in banks' demand deposits and 37.9% year on year rise in other deposits at the CBK. So looking at private sector credit stock, in September, it stood at 2.98 trillion shillings. So that shows a growth of about 7.7% in the 12-month period during September. So this metric, it comprises of a claim on banks and non-banking financial institutions that comes to around 3.1 trillion, together with claims at the CBK, that's 3.2 billion. And interest in suspense for NPLs, that's about 80 billion shillings. So at this 7.7%, it implies that the private sector credit growth target of 8.8% by September which was set by the CBK, it fell short. And just goes to show that banks are still a bit cautious on lending to the private sector. So the CBK's MPC biannual report, it shows that the metric is currently standing at about 7.8 in October. So you can see it still got a way to go before it gets to the double-digit levels. So it's some improvement, but it's still below target. So as per the same statistics, non-bank holdings of government paper stood at 1.95 trillion, resulting to an overall liquidity of 6.13 trillion. That's a 12.5% year-on-year increase. So the logic behind what we think about the increase in non-government holding of of non-bank holdings of government paper, it's because investors are now seeking safety in these other assets, that's the fixed income assets, that's the bonds, because they are more or less risk-free. Because of the uncertain environment, because of the COVID pandemic, as well as the elections that are coming up next year. So usually money supply, in theory, it detects lower interest rates, more investments, and more money in the hands of customers to stimulate spending. So additionally, businesses are usually hypothetically expected to order for more materials and raise employment rates. So bank regulators, they influence money supply by looking at how much banks hold as reserves, how much credit is extended, and other matters. So we saw that actually in 2020, the CBK reduced the CRR rate to 4.25% from 5.25%. So it was a way of releasing capital by banks to stimulate lending. So moving on to some other developments in the macroeconomic view. So data from Kenya National Bureau of Statistics, it indicated that the trade deficits for the 9 months to September widened by 38.6%. Mainly this was due to an appetite an increased appetite for foreign manufactured goods, for fuel, and also due to the increasing cost of imports following the COVID-19 supply chain disruptions. So it shows that the gap between imports and exports is about 988.5 billion in the review period. So we've seen that the cost of imports has been going up, as I said before, because of the global supply chain issues, as well as increased shipping expenses, and just global oil prices going up for countries like us who import it. That's an added cost to us. So it shows that this widening deficit is also having a bit of pressure on the shilling. It's not the only reason, but it's one of the reasons. That's why you see the demand of dollars becoming elevated. So recently also the CBK had noted that the current account balance had widened to a deficit of about 6%, 5.6% of the GDP from about 5% in the same period last year. So we could attribute this also to the same reasons I've given before for the trade deficit widening. And then the inflation adjusted excise duty tax was halted by the courts. So this was for the tax on beer, bottled juice, bottled water, juices, cigarettes, motorbikes, from paying. It was supposed to be adjusted due to inflation to by about 4.97%. But the so also fuel is supposed to be included, but remember that previously it was excluded because now there's an act in Parliament that's supposed to look at ways of how to reduce the price of fuel, mainly by reducing the VAT. So it was argued that the cost of production would rise leading to diminished returns because of this excise duty increase, and the economy is not completely out of danger yet. We see that COVID is still an evolving situation, So right now, to add taxes onto already burdened businesses would curtail business progress. So the taxman had initially targeted about 3.7 billion in additional revenue from inflation-adjusted tax in the fiscal year. Another concern by manufacturers is that the high tax environment can be conducive for an illicit trade by other unscrupulous people to thrive, because when we compare our excess duty to other neighboring countries, you might find that ours is more expensive. So you might find that people will now turn to smuggling. So looking at the fixed income review, for the fixed income segment, market turnover went up by 73.7% week on week to 18.4 billion shillings. So we are of the opinion that investors were positioning themselves for the upcoming December primary bond auction. So market activity was mainly on the infrastructure bond segment, as well as the longer end of the yield curve. That's a running trend that we've been seeing this financial year. So looking at the December primary bond auction, so CBK is aiming to raise about 40 billion. This is about 10 billion less than the previous month. So the issue is the reopening of two bonds. That's the FXD4 2019-10. That's an 8.5. The duration right now is about 8.5 years. And FXD1 2018-20, about 16.4 years. So the auction will be held on Wednesday, 8th of December 2021. And we've seen that now the CBK is looking to cater to both investors who have a medium-term outlook and a long-term, with looking at the tenors that are being offered. So the interest rate for the FXD1 2018-20 is 13.2%, and FXD4 2019-10 is about 12.28%. So we might see a bit of activity more on the one that has a higher coupon rate. So looking at coupon payments, IFB 1-2020-006 is paying coupons today, and that may inject just a bit of liquidity in the market. Additionally, it was announced last week that the first interest payment for the Family Bank Medium-Term Note Program will be on the Thursday, December 23rd, 2021, for the names that appear on the register by the close of business of 10th of December 2021. In the T-bill section, performance declined from 108.64 to 64.55 the prior week. So we can attribute this also to what I'd mentioned earlier, just investors positioning themselves now for the upcoming December auction, December primary bond issue auction. So total bids came in at 15.5 billion with 13 billion accepted. Yields generally on average, they've been going up, and it's gone up by an average about 9 basis points week on week. Looking at the interbank borrowing, it remained relatively stable, just edging up a bit, about 4 basis points to an average of 5.24%. The rate has, however, been rising from around the beginning of the week from 5.19. It closed out about 5.3%. So it's signaling a bit of tighter liquidity in the markets. In terms of open market operations, the CBK mopped up about 31.6 billion through term auction deposits, as well as injected liquidity, about 6.6 billion shillings in the week. So you can see that there's a bit of mixed signals in the market about liquidity. Looking at government borrowing, it's ahead of the curve. It's approximately 336.1 billion, inclusive of the overdraft at CBK. That's against a prorated amount of 278.6 billion shillings. So looking at the macroeconomic and fixed income calendar, we have quite a bit of events coming up. So today we expect the MPC interest rate decision, that's the Monetary Policy Committee. So previously it had been held at 7%, which it has been held for quite some time. So we anticipate that the rate will still be retained at 7% in this coming announcements. Core inflation in the last quarter has been generally subdued due to depressed demand. So that's the non-food, non-fuel inflation. So it's remained relatively stable, mainly due to depressed demands in the pressure in the economy. Additionally, the headline inflation is still within the range set by CBK as a 5 plus or minus 2.5%. Though the MPC had already noted in the previous meeting that they'd keep an eye on inflation, which they believe was being pushed upwards in the short term due to supply chain constraints. Also, looking just at the banking sector conditions, the non-performing loans, they've gone down to about 13.6% in October from 14.2% in April. So though this is still ahead of pre-pandemic levels, there's still some improvements. Then as we said before, private sector credit growth, it's still punching below its weight. And so because of this, we don't see that the bank will raise rates because it's still trying to stimulate the economy by promoting lending. On COVID vaccinations, Ministry of Health said it's about 9.6% of the population at the moment, and it's working towards the 10% target towards the year. On 30th, we're expecting the November inflation rates year on year. It was 6.45% in October, and it went up mainly due to food costs. For the fuel, the price stabilization mechanism was in place. That's why the fuel costs didn't go up. So we're just waiting to see this month how it will be, but the price of food has been going up, so it might have a bit of pressure on that end. On the 2nd of December, we have the 91-day, 182-day, and 364-day T-bill auction. And on the 3rd of December, we have the November Purchasing Managers Index. It was about 51.4 in October. Mainly, it showed an improved reading on the removal of the dusk to dawn curfew, as well as the review of operating hours. So just some of the things that the panelists contributed to the high costs were the rising fuel prices, the increased VAT, and supply chain bottlenecks. So we're just waiting to see what the November PMI will stand at. For the fixed income trade, we have bid-ask levels of on FB1 2021-21 at 12.4%. So this infrastructure bond it has been driving market volume, and it has a very attractive coupon rate. And just to remember that it's tax-free, as well as the yield right now is quite favorable. I'll hand it over now to Wesley to take us through the equity market recap.
Thank you, Melody. I know you got a new visitor who walked in. You can pass our greetings.
Good morning to you. Investors with bearish sentiments drove activity during the week as signaled by the benchmark indices week-on-week performance. The Nairobi All-Share Index shared 2.2% week-on-week to settle at 164.77 points, while the NSE 20 Share Index shared 40 basis points on a week-on-week comparison to close at 1,886.35 points. That said, turnover surged 138.7% week-on-week to 5.96 billion, driven by Safaricom, which turned over 4.2 billion in the week. Looking at the week's gainers and losers, NBV led the pack of the week's top performers on a 49.1% week-on-week rally. Kakuzi, EA Portland's, KPLC and ABSA gained 10%, 5.6%, 4.7%, and 4.3% week-on-week respectively. On the flip side, Liberty led the week's laggards, shedding 8.9% during the week. Samia, NMG, KCB, and KenGen shared 7%, 5.8%, 4.5%, and 4.4% week-on-week respectively. Looking at foreign participation, foreigners accounted for 49.6% of the week's turnover. They sustained a bearish outlook, exiting Safaricom, EABL, and Stanchart while accumulating on Equity and KCB Group. They clocked a net outflow position of 2.6 billion. largely on account of the outsized exits on Safaricom. On the sub-Saharan market performance, the Nairobi All Share Index dwindled below its select peers on a week-on-week median comparison. On the corporate calendar, Stanchard's 5 shillings interim dividends book closure will be on the 7th of December. KenGen's is on the 16th, and NSE's 50-cent special dividend book closure will be on the 17th of December. To you, Melanie.
Thank you, Wesley. So just having a look at the financial sector stocks, as Wesley had mentioned before, ABSA was up 4.3% week on week. And HF Group was down 11.8% week on week. For the insurance stocks, Liberty, as Wesley had mentioned, 8.8% week on week decline. However, Britam was 2.5% up week on week to 7.42. Jubilee Holdings up 3.7% to 340 shillings. And Kenya Re, the highest growth, about 4% to close at 2 shillings and 36 cents. So looking at just what was in the news last week, so it's been reported that mobile lenders to reveal hidden charges. So digital lenders will be required to disclose their full fees and penalties to the competition watchdog every 4 months as part of efforts to fix the issue of hidden charges. Secondly, the NBK officially delisted from NSE on the 25th of November. So it was approved and issued by the CMA pursuant of Capital Markets Regulation 2022. So the boss had called on all shareholders, investors, and general public to take notice of the delisting. So NBK's acquisition by KCB was made formal in September 2019 after approvals from CBK and the CMA. So after the acquisition, the NBK shareholders who swapped their shares for those of KCB are able to trade freely on the new stocks at the NSE. Thirdly, KMRC stocks set stage for mortgage-backed securities. So Kenya has taken initial steps towards setting a secondary mortgage markets where lenders will sell home loans to long-term investors such as pension funds and insurers at a discount. So we're just going to wait and see how the uptake of this new security asset will be. Fourth, Competition Authority of Kenya flags 12 banks with hidden mortgage charges. That was according to a report by the Competition Authority of Kenya. So basically, we believe that with the review now, banks will be forced to be more transparent about their charges, and it might increase client confidence in these banking products. For the trade of the week, I'll let Wesley go over that.
Thank you. For our risk-on trading idea for the week, we have a speculative buy on Safaricom. We believe that the market's reaction to the developments in Ethiopia has created an entry point given the shed of premium. Back to you, Damaris.
Back to me so soon. Thank you so much for the presentation, guys. Okay, I didn't expect that. I think I expected the last one to be long and fluffy, but quite all right. I was actually getting some answers for the questions that I've seen come in. So let me handle Rachel Karuri's questions first. Rachel wanted to know, has Genghis started trading where you buy shares and sell them at the same time? Rachel and everyone else, that's day trading that was launched last week. And yes, you can day trade with Genghis Capital, just the same way you used to send in your instructions for share trading. For example, if you didn't want to use a Jacuzzi app, you would usually send your instructions to clientrelations@genghis-capital.com. So if you want to engage in day trading, yes, it's up and active. So please reach out to the client relations team who trade on behalf of clients. when they receive the instructions. After I read the different questions, I'm going to type out the email address in the chat box just in case you missed it. So hopefully that's a good answer for your question. There was a question from David Kubai, which I responded to, but David, I don't know if you saw the response. You said you're having an issue getting a verification code for your Jacuzzi application. So I've requested you to privately chat me your Jacuzzi email address and phone numbers. Sometimes there's some clients who, when they're onboarding, they're not able to get the verification code because of either one, they have opted out. You know, the way you can opt out of promotional messaging. So I think the verification code is flagged as promotional messaging and is blocked. But if you chat us the information I've requested, we'll be able to generate it and send it to you via email. So please do that. We have 7 other questions, so let me go through them one by one. Cliff Mayaka was asking, what is the forecasted impact on the economy of the new COVID variant? Omicron, I believe. It sounds like a Decepticon from Transformers. But maybe we could start tackling that one first as we read through the rest.
No, we can't answer that because even scientists still don't know the full extent out and the new COVID variant. So a lot of modeling has to go in there.
Okay, so you are breaking up, but the disembodied voice was George Bodo. Cliff, I believe what he's saying is that it's going to take some time to be able to comprehensively know how the new variant is going to impact the economy. Right, Melody and Wesley?
Yes, it's still an unknown.
Okay, so let's just give it some time. I don't know when next we'll be able to meet in a similar forum, but then by then you'll be able to have a comprehensive answer. Titus Kinyu is asking, what are the odds that insurance sector share price will rise in the medium term? So who would like to?
We still don't have a view on the insurance sector, but we'll have a view in the next call.
Cool. And then Titus is also asking, how will the excise duty affect the EABL share price?
I think I can try and tackle this one, and then Wesley can add on that. So at the moment, as I said before, there's the issue of brewers seeing that it might affect the people who the earnings. Already right now, people are struggling to survive, quote unquote, because of the increased cost of living. And if you add more excise duty on top of that, the goods become more expensive to acquire. So also there's that issue of the threat of smuggling and illicit trade that can affect. But on the EABL share price, they say they have their own brands. I think that's the jeans, if I'm not wrong. I think Wesley can carry on from there.
Yeah, actually, Melody, you've covered much. Yeah, the gene revolution is something big on ABL segment, but if there's an excise duty revision on the brands, we expect to see the cost to remain elevated, but that's something even the management in the last call we had with them, they pointed out as a major headwind that they face, the regulatory environment as a whole. But all factors together, I believe there is more that the company has to drive the share price, including Tanzania being such a key driver to a point that its growth in other markets will be a cushion to this headwinds they face in the regional market.
Okay, thank you so much for that. Joseph has a question about Safaricom. So he's asking what's the PE at which Safaricom is trading at the moment?
Well, for the PE, maybe we can answer you that by email.
Maybe you could elaborate what exactly Joseph is asking and what we would send by email.
Yeah, for the PE ratio for Safaricom that's trading at the moment, maybe we can have some more conversation in that via email. But what we know, the price to earnings ratio, given their last financial, is supposed to be high because the prices have been on a decline trend.
Okay, all right. Samuel is saying, given the cleaning up at KPLC, what's your future outlook on the stock? So all the investigations taking place at KPLC, do we see it affecting the stock positively, negatively?
No, there's so many moving parts on that company. So we still don't have a full grasp of what's going to turn out. We're also still trying to figure out.
Okay, sawa. And just two more questions. Titus is again asking about the most favorable technical entry point for Safaricom.
Titus, sorry, we don't have a technical just yet. So this is a tough one for us to take one.
I'm sorry, I didn't catch any of that. I think there are several mics in that room which are on.
I was saying
Melody. Okay, go ahead.
So I'm saying, I'm answering Titus' question. And I'm saying that we don't have a technical analysis desk here. We're all fundamental analysts. So we wouldn't take that.
Okay, and will MBS work in favor of banks in the real estate sector?
Well, we don't have details on the nature of how KMFC wants to do this, but yes, typically MBSs help with banks, because banks are naturally supposed to be originated, then they sell down whatever they make. So yes, it works in favor of banks.
All right, and the final question is, how is MBV shares performing?
it's already up.
Pre-market is up 2%, 2%.
Okay. All right, so I think those are the questions for our research analysts. If anyone else has any follow-up questions, you can find us on our social media channels. Juma says he can't buy unit trust using Jekuze, can someone assist? Juma, could you kindly reach out to us? Oh, I know I'd promised some email addresses, so let me just chat them on the chat function. But I would like to know exactly what the problem is. Has the option for unit trust disappeared from your app? Or when you're going to invest unit trust and buy, the option is not popping up? So, but I'm going to share email addresses you can reach out on. So the first one is for investment banking, clientrelations@genghis-capital.com. That's for anyone who's interested in day trading like Rachel was. And then the second one is for our asset management business. So if you're having issues buying unit trust or anything related to Hele Mara, please reach out to clientrelations@genghis-capital.com. Or alternatively, just reach out to us via any social media platform and we'll be able to assist you. So I hope that's been useful. Thank you for joining us for this final edition of the Genghis Weekly Investor Briefing. We will be able to communicate any future engagements, if there'll be any, with our research team via your email addresses. We wish you the best in the coming months and as we go towards the end of the year. Melody and Wesley, thank you for sticking throughout this, through thick and thin. Ian, thank you for always hopping in for our bond questions. And George, thank you so much for your insights. Cliff, I don't know, I feel like it's interesting, but Merry Christmas. Thank you very much. I suppose it'll be December on Wednesday. So we can start talking about that soon. So thanks, team, and we will meet very soon. Goodbye.
Bye. Oh, there's one question for Kim for the FXD.
Oh,
The
okay.
effective interest rate, the 13%, it's inclusive of tax.
So it's inclusive of tax.
Yeah.
All right, there you go. A goodbye with a bang. Thanks so much, Melody, for spotting that. Everyone else have a great week ahead.
Have a great week. Thanks,
Bye.
Damaris and team.